Southwest Florida's market just changed big time. Over 17,000 homes are for sale, while most owners are stuck with their old, cheap loans. I've helped hundreds of families buy and sell here. What's happening now is totally different. Today, I'll show you the 7 reasons this shift happened and what it means for your next move. Wait too long, and you could lose out on 6 figures. All right, so let's talk about what's really happening in our market right now. We've got way too much inventory sitting out there. I mean, we hit over 24,000 active listings across Southwest Florida at the peak earlier this year. Now we're down to about 17,500. That's still a high level that we haven't seen in years, ladies and gentlemen. And yeah, that number's dropped some, but here's the thing. We still got more homes available than buyers ready to buy them. And I can tell you firsthand, this is creating some real opportunities if you know what to look for. Now, here's what's wild. Home prices are down 15 to 20% from that crazy peak we hit in July 2022. But listen, and this is super important, they're still roughly 45 to 75% higher than before COVID, depending on your market. So even with that drop, if you bought your home a few years back, you're still sitting on some serious equity. That's the part people forget when they start panicking about prices, you know? And stick around, because in a few minutes, we're going to dive into the Fed's recent rate cut and what it really means for the Southwest Florida housing market. But before that, here's what's really keeping this market stuck. About 70% of homeowners have mortgages under 5%. Think about that for a second. They're not going to trade that sweet rate for today's higher rates. So instead of selling, they're just staying put. And now we got builders cranking out new homes at every single price level. They're competing with existing homes everywhere. So you combine all that and boom, we got this oversupply where buyers have more choices than they've had in years. To be frank with you, most people see this oversupply and think it's terrible news, but here's my rebuttal. This could actually be your best shot in a long time. Sellers are getting flexible. We're seeing negotiating powers we haven't had in years. The good side is, if you understand what's happening, you can really take advantage of this shift. So again, to really get where this is headed, we got to look at what the Fed just did with rates and how that's playing out for mortgages. Let's dive into that. So the Fed stepped in recently and cut rates into that 4 to 4.25 range. You'd think that would send shockwaves through the housing market, right? Well, mortgage rates did drop some, with seeing the average 30-year fixed here in Florida coming in around 6.2% and 15-year loans hitting about 5.4%. Nationally, we're about 6.35%. Now listen, those numbers are definitely better than the painful 7s we were dealing with earlier this year. But here's the big question. How much of a difference is this really going to make? Here's what most people don't get. Mortgage rates don't actually move directly with the Fed cuts. They're tied more to those 10-year Treasury yields. So by the time the Fed makes their big announcement, a lot of that impact is already baked in. I mean, even though rates are down, it doesn't mean buyers are going to flood back overnight, you know? And to be frank with this, we've got this weird situation happening. Lower rates sound like they should pump up demand. And yeah, some buyers who got priced out a few months ago are starting to peek back into the market. But here's what nobody's talking about. Lower rates might actually cause more sellers to list their homes first. Why? Because if you're sitting there with a 6.5% loan, suddenly refinancing or moving makes more sense. And that can push more inventory onto the market before we start clearing it out. So again, the key isn't just watching the rate itself, it's whether these lower rates actually help us chew through our oversupply. If rates drift down into the low 5s, ladies and gentlemen, that's when we'll really start seeing things move. But before we get there, you got to understand how population growth and migration play into all this. Because at the end of the day, demand isn't just about rates. It's about who's moving here, where they're coming from, and how they're reshaping Southwest Florida. Let me show you what's really happening. We're still seeing tons of people coming in. Retirees, Midwestern families, folks from the Northeast, they're all looking for sunshine, lower taxes, and that lifestyle you just can't get up north. Now, Fort Myers has been topping the charts as one of the fastest growing cities in the entire country. Cape Coral isn't far behind either. You've got Lee County pushing towards about 1 million residents in the next few years. That's wild when you think about how quiet this area felt not too long ago, you know? And Naples, it's leading the nation acceleration in new apartment growth. That tells you builders are betting big on long-term demand here. And I know right now you're probably thinking, is he going to talk about post-hurricane rebuilding and those insurance costs? Stay with me because we're getting into that in just a moment. But here's the twist. Migration slowed down compared to those crazy pandemic years. Back then, the flood of people moving to Florida was absolutely insane. Now the pace is a lot calmer. But listen, one group is still pouring in. Retirees. Florida pulled in more retirees last year than any other state, and Southwest Florida is a top destination. So even though overall migration numbers dipped, that retiree pipeline is still going strong, and that's keeping demand steady. Yeah, you hear stories about people leaving Florida because of insurance costs or hurricanes, but to be frank with you, inbound moves still rank us in the top tier nationally. I mean, U-Haul trucks are rolling down I-75 every single week. They're packed with families making the jump down here. And here's what's really interesting. Hurricane Ian didn't just change the skyline here. It completely changed what types of homes people want. Let me show you how that's playing out. Hurricane Ian is still shaping this market even though it's been a few years now. You drive through some neighborhoods and yeah, you still see the scars. But at the same time, you also see shiny new homes going up everywhere. They're built stronger, built smarter, and built to handle the next storm. Now, those homes that went up after stricter building codes back in the early 2000s, ladies and gentlemen, they proved their worth. I mean, during Ian, those homes stood way stronger than the older stock. That's why buyers today are willing to pay a premium for anything that's hurricane resistant. Impact windows, concrete block, elevated foundations. Buyers want it all, and builders know this, so they're delivering exactly what people want. Insurance though, let's be straight honest here. This is the biggest pain point we got. Premiums have climbed about 30% statewide, with some counties seeing increases up to 45% since the storm. The average Florida homeowner policy is averaging about $3,500 to $4,000 a year, with coastal areas reaching much higher. That's the highest in the nation, and it totally changes the math for buyers. For some folks, the insurance payment is literally as big as their mortgage payment. Think about that for a second. And here's where new construction has this massive advantage. Not only are these homes safer, but insurers are willing to write policies at way more reasonable rates compared to older properties. So listen, while the sticker price on a new build might look higher, in the long run, the carrying costs can actually be lower. That's a game changer for a lot of buyers. But before we crunch those numbers out, we got to look at how this surge in building is changing our overall inventory picture, because it's really affecting everything. So let's dig into inventory, because this is where the market shift gets real. Earlier this year, we were sitting on about 24,000 active listings across Southwest Florida. Since then, that number has pulled back closer to about 17,500. But listen, it's still way more than we've seen since those crazy days of 2021 and 2022. So yeah, buyers finally have options again. Now, the balance point in real estate, what we call a neutral market, is usually around 6 months of supply. Right now, most of our counties are sitting above that. Lee County is at about 7 months, Collier's about 7.5 months. That tips the scale towards buyers, Doesn't mean sellers can't get deals done, but it does mean the days of throwing any price out there and getting multiple offers overnight, those are gone. Here's what's happening in practice. Properties are selling for about 94 to 95% of their list price. That shows sellers are giving ground. Homes that are priced realistically are moving, but the ones still chasing last year's dreams prices, they're sitting for 3 months or more with nothing happening. I can tell you firsthand, pricing right is everything in this market. So again, the story isn't just inventory is high, it's that buyers have leverage they haven't had in years. And sellers who adjust quickly, they're the ones winning. The good side, if you understand these numbers, you can make smart moves whether you're buying or selling. But let's break it down city by city, because Naples, Fort Myers, Cape Coral, and Punta Gorda are all telling different stories right now. Each market's got its own thing going on. Naples is still flexing its muscles in the luxury world. You've got cash buyers making up more than half of transactions down there. The median price is sitting over $600,000. And when you see multi-million-dollar sales closing week after week, that tells you high-end demand is alive and well. Meanwhile, Fort Myers and Cape Coral, this is where affordability and growth collide. prices have fallen more than 10% from the peak. And with so much inventory, Cape Coral especially is getting hammered with that worst market label. But let me tell you something, sometimes being called the worst is actually your best shot to get in. Buyers who play it smart can snag deals in Cape that would have been impossible 2 years ago. I can tell you firsthand that's creating some real opportunities. Now, if you're curious to know what all this really means for buyers, sellers, and investors, you've got to stick around until the end because we're closing this video out with a bang. But first, let's talk about Punta Gorda. It's quieter, slower paced, and that's exactly why retirees love it. Prices are off from the peak, but value seekers are finding great fits there. The median's around $390,000. And listen, when you stack that up against the statewide picture, you're seeing real value opportunities across Southwest Florida. That's not something we're used to hearing, but it shows how much opportunity is opening up right here. So again, each market's got its own thing happening. Naples stays strong at the top. Cape and Fort Myers are creating opportunities. Punta Gorda's perfect for the quiet life. Because once you put all those pieces together, the real question becomes this. What does it actually mean for buyers, sellers, and investors trying to make a move today? Let me break that down for you. For buyers, listen, this is hands down the best shot you've had in years. You've got choices, you've got leverage. Sellers are more flexible than they've been in a long time. Homes are closing for about 94 to 95% of list price, which means you can negotiate. And don't forget, new construction with hurricane-ready features can give you that insurance savings that older homes simply can't match. The window won't stay open forever, though. Once those seasonal buyers roll back into town in January, competition heats up again. So timing matters here. For sellers, the message is simple. Price it right or plan a sit. The market isn't going to support those sky-high 2022 numbers anymore. Overpriced listings are lingering 3 months, sometimes longer, with no real activity. But sellers who come in competitive are still finding buyers. Some are even seeing multiple offers. To be frank with you, it's not about chasing yesterday's market, it's about being realistic in today's market. And for investors, ladies and gentlemen, this is where it gets exciting. New builds with modern storm codes are going to hold long-term value and attract buyers who want peace of mind. If you're sitting on cash, places like Naples are tailor-made for you since cash is king down there. And even markets like Cape Coral, where oversupply looks scary, you can pick up properties at a discount that'll look like steals 5 years from now. The biggest mistake I'm seeing right now is people trying to time the absolute bottom. But here's the thing, the real play is making the right move while you have the leverage. So again, whether you're buying, selling, or investing, the opportunity is right in front of you. The question is whether you'll act on it while the market's giving you this rare opening. So here's the bottom line. Southwest Florida's market is facing an oversupply. Too many homes sitting compared to active buyers. Mortgage rates came down after the Fed cut, but the real test is how many buyers that actually pulls back in. The big goal now is simple. Chip away at this inventory, and how fast that happens depends on where rates go next. At the same time, builders are competing at every level, pushing back against existing homes. Prices, they skyrocketed about 80% during COVID, dropped roughly 15 to 20% from the peak, but they're still around 40 to 75% higher than pre-COVID depending on your market. Normally we'd expect something closer to 5% a year. So yeah, this market's been a roller coaster. Affordability is the crunch point. Around 70% of homeowners have mortgages under 5%, which locks them in. Lower rates might even push more of those folks to list before it helps clear supply. That means this market could stay slower to balance than people hope. Here's my advice. Don't wait for the perfect bottom. Whether you're buying, selling, or investing, the leverage you have right now is rare. And to be frank with you, it's not going to last forever. So listen, if you want my complete Southwest Florida market analysis personalized for you, email me at hello@swfloridarealestate.com. I'll show you exactly which neighborhoods and price points are real opportunities today. I can tell you firsthand what's moving and what's stuck. And as always, I hope one day I get to call you neighbor. Let's go. Now, if you're serious about making a move in Southwest Florida, you don't want to miss what's coming next. In my next video, I'm breaking down exactly where I'd move if I was starting fresh in 2025 or 2026. And trust me, the spots I'm going to show you are the ones most people overlook. That's where the hidden value is, and that's how you save yourself serious money.